Hey, welcome to Money Path, where we make personal finance actually make sense. No fluff, no pressure, just real stuff that works. Today, we're diving into something a lot of people think about but don't know how to begin. How do you start investing when you're broke? Yeah, I said it. Not when you've got 10 grand sitting around. Not when you finally get that dream job. But now when money's tight, and you're wondering how to even begin. And if you're thinking, investing? With what money? Trust me, I get it. I've been there. But what if I told you that you don't need a lot to start? That with just a few bucks, a phone, and a plan you can become an investor this year. Stick around, because I'm going to show you exactly how to start investing in 2025, even if your wallet feels a little empty. So before we jump in, go ahead and like this video, subscribe to Money Path, and drop a comment below saying, I'm starting today. Let's get into it. Alright. First things first, let's talk about the big lie that stops most people before they even start. The idea that investing is only for the rich. You know, suits, stock tickers, Wall Street, six-figure income. That's all noise. Because here's the truth, you don't invest because you're rich. You get rich because you invest. Let that sink in for a second. The key isn't having a lot of money. The key is knowing what to do with the little you do have. And when you do that consistently, game changer. Step 1, build your base. Now look, if you've got $20 to your name and rent is due in 3 days, let's not pretend you should throw it into the stock market. Let's be smart. Before you invest, build a tiny emergency fund. Doesn't have to be fancy. $100, $300, whatever you can manage. That's your safety net. So when life happens you're not pulling from your investments just to cover groceries. Also, if you're carrying credit card debt with 20% interest, that's where your money should go first. Because no investment is beating 20% guaranteed. Start stable, then grow. Step 2, pick a beginner-friendly app. It's 2025, you don't need a broker or a suit. You need a phone and a good app. Here are a few you can check out. Fidelity, reliable, no fees. Beginner-friendly, Sify, clean layout. Free investing, M1 Finance, great for building your own custom pies. Public, social investing with a learning twist. Robinhood, super simple, but use with caution. These apps let you invest with as little as a single dollar, and you can buy fractional shares. That means you don't need $500 to buy Tesla. You can invest $5 and still get in. No excuses. No gatekeeping. Step 3, keep it simple. Seriously, please don't jump into investing trying to find the next big thing. You're not here to gamble. You're here to build. And the best way to do that, index funds and ETFs. Think of them like baskets. Instead of picking one risky company, you get a piece of hundreds at once. Some great options to look into: VU tracks the S&P 500 VTI total US market, focuses on dividend stocks. Bank, real estate investment trust. At pick one. Set it. Forget it. You're officially an investor now. Step 4, invest small, but do it consistently. Look, it's not about throwing in $500 once and hoping it grows. It's about investing $10 every week, every month, whatever works for you. That's called dollar cost averaging. It means you invest the same amount on a schedule no matter what the market is doing. Sometimes you'll buy at a high, sometimes at a low, but over time, you average it out and it smooths out the risk. That's how long-term investors win. Small, consistent action. Step 5, automate it. The best investors don't rely on willpower, they rely on systems. So here's what you do: set your app to auto-invest $5, $10, $50, whatever you can spare every week or every payday. Boom, you've just turned investing into a habit. It's happening in the background. You don't have to think about it. You don't get tempted to skip a week. And the best part, you'll barely feel it coming out of your account, but years from now, you'll definitely feel the results. Step 6, change your mindset. Here's something real: your biggest money obstacle is usually you. Not the app, not the market, not your paycheck. It's the belief that you're too broke to invest. I want you to flip that. Instead of saying I'm broke, say I'm building. You're not behind, you're just early. Don't compare yourself to the people who've been doing this for years. Stay in your lane, stick to your plan, and remember, you're doing what most people never will. You're building wealth from the ground up. And that takes guts. Real quick, if this is speaking to you, hit that like button. It helps this reach more people who need to hear it. And if you haven't yet, subscribe to Money Path, because we've got more content like this dropping every week. Step 7, watch out for the traps. When you're new, it's easy to fall into these chasing hype stocks you saw on TikTok, pulling your money out every time the market dips, thinking you'll get rich quick investing money you'll need next week, or dumping all your cash into one company. Don't do that. This isn't a get rich quick game. It's a get rich slow and stay rich forever game. And if you stick with it, you'll see how powerful that slow and steady approach really is. Let's bring it home. You don't need a finance degree. You don't need a ton of money. And you definitely don't need to be perfect. You just need to start. Start with what you have. Start with what you know. And grow from there. You're not just investing money, you're investing in yourself, in your future, in your freedom, and that's what it's all about. So here's your challenge: pick an app. Pick one ETF. Set a small amount to auto-invest each week. That's it. You've just built your first wealth habit. And that habit, it could change your entire financial future. If this video helped you feel even 1% more confident about starting your investing journey, do 3 things right now. Tap that like button, hit subscribe to join the Money Path family, and comment below, "I'm starting with this week." Let's build this thing together. And remember, it's not about timing the market. It's about time in the market. So take the first step. Walk your money path and keep going. We've got your back. Thanks for watching, and I'll see you in the next one.